Before today's video, it might be a good idea for you to jump in my free Discord server. It's a great place to build and share your crypto knowledge and connect with like-minded, ambitious individuals. It's for people of all experiences, whether you're a crypto newbie or a seasoned professional. So jump in and network with me and an ever-growing community of intellectuals. Hello everyone, and welcome back to a slightly different video on my channel today regarding the psychology in crypto. These big YouTube accounts don't really focus on things such as the psychology of investing in these volatile markets and mastering your emotions. They focus more so on which coin is going to 100x or what they're buying or daily news, all of which is very important and instrumental to success, don't get me wrong. However, so is the emotional side, perhaps even more so. Whilst they focus on recycling information, it's up to the smaller channels like myself to bring actual useful tips to my community, not just what the best coins to buy are. So you're in one of the best places to be in all of crypto YouTube here. I studied psychology back when I was in education, and since then I've done plenty of ongoing reading and researching. It's a topic I'm always interested in, and it's something which is extremely applicable to investing, not just in crypto, but in general. Obviously for my audience and my niche, I will keep it specific to cryptocurrency, but bear in mind this can be applied anywhere. I'll start off by saying that if you are watching this video, you are 100% guilty of at least one of the things that I will mention today. Either in the past, in the present, or potentially in the future. And that's okay, we all make mistakes, and it's the mistakes which are crucial to learn from. I know it's a cliche, but it is actually true. If you haven't made the mistakes yet, then try and learn from the mistakes of others such as myself from being in this sector for over 5 years. This is an extremely broad topic, and I'm not too sure whether it's something that you guys as my audience are interested in. To cover off all the points I wish to address would be a video which is potentially hours long, so I'll try and keep it short and snappy today, as if only to test the waters. Be sure to stick around till the end, as I believe that the final point is the most common and hardest mistake to deal with. So right now I will focus on emotional biases in crypto, as I actively see these being some of the biggest problems from in my own friends and family to my network and in my community. There are 3 types of emotional biases I'll be covering today. The first one being the popular term FOMO, or fear of missing out. This one's pretty well known, and it's a psychological phenomenon where individuals experience anxiety or unease at the thought of missing out on a rewarding or satisfying experience, particularly when others are perceived to be benefiting from it. In the context of crypto, FOMO often manifests when investors see the price of a crypto rapidly rising and fear that they will miss out on potential profits if they don't invest immediately. There are numerous examples of FOMO in crypto, the first one being buying at peaks. This is where you may succumb to FOMO and buy a crypto when its price is already at or near its peak, driven by the fear of missing out on further gains. I've said numerous times in the past, don't go chasing green candles, and that's basically what this one is. You can pretty much use any example from crypto here, but I'm going to use Luna from last cycle, as this is one where I learned a lot of lessons. We can see the green candles here building up before the inevitable crash or rug, whatever you want to call it. And my initial entry in Luna was actually really good. I believe it was maybe a couple of dollars, so maybe down here. But I saw the green candles, and in my mind I was just like, this is going to keep going up. So I was buying. I even bought around here before the inevitable bang. I mean, look at this, it's horrific. But yeah, a lot of lessons were learned here. In terms of how to deal with it, like all, this is down to experience and making mistakes. Instead of making impulsive decisions based on FOMO, take a step back and breathe. Try to be rational, evaluate its fundamentals, underlying tech, market trends, potential risks, etc. before making an investment decision. Setting predefined entry points or buying on dips can also help to avoid buying at the peak prices. Like, this would be a good time to buy, but me being the idiot I was buying up here, everywhere. FOMO can lead investors to chase after hyped projects or hot cryptocurrencies without fully understanding their value proposition or long-term prospects. Kind of like a everyone else is buying it, so why shouldn't I herd mentality. Here is where you should focus on investing in projects that you believe in and understand, rather than chasing short-term trends or hype. I get that many of you are new here, so you aren't too confident in your own decisions. Understandable, so this is where you need to follow the right people. I don't advise for copying exactly what anyone else does, as ultimately you are responsible for your own finances at the end of the day, and I will always say learn yourself, etc. But there'll always be people that do just want to copy, so make sure that your mentor or whatever is credible. Yes, it's counterproductive and technically could be a form of FOMO, but at least there's some rationale behind it. In terms of FOMO on new projects, it's a typical conduct due diligence on the team behind the project, its tech, adoption rate, potential real-world utility, etc. Many different factors. And avoid investing based solely on social media hype or recommendations from others. There will naturally be exceptions to the rule, but if you constantly do this, there's a huge risk of wiping yourself out. Linking to this is making a decision too quickly. FOMO can pressure you into making rapid investment decisions without carefully considering the risks and consequences. This is where discipline comes in and being in control of your emotions. Easier said than done, I know, but the first step is being aware of it. Sticking to strategies and remaining patient is key, even if it means missing out on short-term gains. FOMO can also lead to you ignoring risk management. It may cause you to overlook key risk principles like portfolio allocation and diversification in favor of chasing high-risk, high-reward opportunities. This one again comes down to discipline and control, and remembering your original plan. By the way, if your plan was to FOMO in, by all means go nuts and have fun. But for the majority of you, I suspect that isn't the case. Now that we got the obvious one out the way, we move on to loss aversion. This is where people tend to prefer avoiding losses over making equivalent gains. In other words, the pain of losing is psychologically more significant than the pleasure of gaining. This bias can have significant effects on decision making. The first example I see is reluctance to sell at a loss. You may hold on to losing crypto assets for too long because you are unwilling to realize the loss by selling. For example, I'll go back to Luna because I learned a lot of lessons here the hard way and it's extremely applicable. So I held on to Luna whilst I watched the price plummet, hoping that it would recover. And I even bought some, trying to catch this falling knife. I remember being in the office, literally setting buy orders and stuff and just happy that my bags are getting filled, hoping it'd recover, but I lost a lot of money that day. I still had numerous points to sell at this red candle, by the way, while still in profit. I wasn't even at a loss until the very end. That was just greed and ill discipline. The easiest way to deal with this is stop losses, I guess, as it will do the job for you if you haven't got a conditioned mind yet, and it kind of takes the emotion side out of it. This is also linked to how much capital you have invested. If it was like throwaway money of $100, let's say, there's no surprise you don't want to sell at a loss because the loss isn't even that big. However, if it's thousands or indispensable, you're better off keeping some of the money and potentially rotating into another project, which in hindsight is exactly what I should have done with Luna. Linking to this, chasing losses is also something at least one of you watching is guilty of. After experiencing a loss in one investment, you may become more aggressive in the market, seeking higher returns to recover the losses, leading to impulsive decisions and increased risk-taking. There's no right fix to this, everyone can deal with this in their own way. Some of you may take a break from crypto for a while, some may relax on the whole investing part and just stick to researching. It's a difficult one to have a fix for as it's more raw human emotion, which will vary depending on personality types. The key here is awareness, being aware of it. Another danger of loss aversion is that it can cause you to hold on to underperforming coins whilst there are better opportunities elsewhere. So I'll give you a personal example I had with IOTA from last cycle. Fundamentally, it's a very strong project and I was a fan of it in the last cycle, bought it, held it, and you can see that it stagnated from a period of May 22 all the way up to October 23, so almost a year and a half. I held on to IOTA all this time here before eventually making a switch into other projects midway through 2023, so around this time, which we can see after IOTA pretty much did nothing. Yeah, it had this green candle, but it's pretty much back where it started, whereas the projects that I invested in all rose significantly. So I made the switch out of an underperforming asset into a different one. I was in a loss in IOTA from this position here, but I made the switch into alternative coins and have since seen my overall portfolio rise astronomically because of it. Also, this will only be applicable if you're an investor as opposed to a trader, but from an investing perspective, I see a lot of people forgetting to take a long-term approach to their projects. Short-term losses lead you to overlooking the longer-term potential, meaning you can actually cut your losses way too soon, purely based on some negativity. Atoll springs to mind as an example for me to use. We can see here there was a massive pullback in the market due to a lot of FUD and negativity, and a lot of people did end up selling their bags, cutting their losses, etc. But if you did so, you missed this absolutely delicious pump all the way up here above $3. And even right now on this pullback, you're still above compared to where the pullback started. So short-term fluctuations are completely normal in any investment, including stocks and shares, let alone something like crypto. The final and arguably the most important emotional bias that I'll be covering in today's video is called confirmation bias. This is a cognitive bias that refers to the tendency of individuals to seek out, interpret, and remember information in a way that confirms their pre-existing beliefs or hypotheses, whilst disregarding or downplaying contradictory evidence. In the context of crypto investing, confirmation bias can lead to investors selectively interpreting information that supports their bullish or bearish views on a particular crypto, whilst completely dismissing information that contradicts their beliefs. I see this all the fucking time in Discord servers, in my own, in others, on crypto Twitter, always. I see it in life very regularly too, but that's a completely different conversation. This is a very dangerous emotional bias to have, as it can take a lot more than just being aware of it to solve. It could be an innate character trait which you fail to see or fix. The first example is selective news consumption. Here you may selectively seek out news articles, social media posts, or expert opinions that validate your existing beliefs about a crypto. Example, this guy is bullish on Project Y, I'm going to follow him. This guy hates Project Y, I'm going to block him. You can see why this is dangerous, right? You need both sides of the coin to form a realistic argument and perspective. The way to deal with this is simple. Use a plethora of sources, follow many influencers, be in many different communities, etc. And always try to remain objective and take your emotion out of it. Linking to this point is when I see people ignoring contradictory evidence or opinions almost intentionally. You may dismiss or downplay contradictory evidence that challenges your bullish or bearish outlook on a coin, preferring to focus on information that confirms your beliefs. This one's a hard one to deal with as it could just be an innate issue, but it's one I see so often in crypto and honestly can lead you to restricting how much money you make or even increasing the amount you lose. An open, flexible and adaptive mindset is needed here. In terms of specific examples for this one, guys, just jump on crypto Twitter, jump in my Discord, jump in other Discords, and all you will see is people fighting with each other. I promise you it will take you no more than 30 seconds to see someone put an opinion out there, instantly get shot down, go back and forth, blah, 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 blah. We've all seen it. So yeah, so much evidence on this one. The final example that I will give for confirmation bias is seeking social validation. This is where you may seek validation from your social circles or online communities which share similar bullish or bearish views on a crypto, reinforcing your existing beliefs through group consensus. Thinking of an example off the top of my head, it's like investing in a coin like Casper and sticking only to pro-Casper forums and chats. You're not exactly going to get a diversified opinion here. And the way to deal with this one's pretty simple. You just form a diverse network of opinions and perspectives to avoid being trapped in an echo chamber of sheep, pretty much. Engage in constructive dialogue and debate with individuals who hold different views, and be open to challenging your own assumptions and biases. Please guys, this is so important. My Discord is absolutely great for this. There's so much open dialogue and contradicting opinions with little to no hostility as well. So yeah people, that's the video on some emotional biases in crypto wrapped up. I hope you found it helpful. I know it's a little bit different to my usual content, but there are many people out there who struggle with these sorts of things due to lack of experience. It all comes down to experience at the end of the day, and hopefully you guys can leverage mine here. I hope you enjoyed. Please feel free to leave a like and comment to let me know what you guys thought, and also feel free to subscribe. My Discord is completely free and is in the comments, so I look forward to seeing you in there. Aside from that, I'll catch you all in the next one. Take care.